I'm joined today by Gretchen Guenther, shareholder at Teal, Becker and Sharamonte CPAs. How are you today?
Good. How are you? Thank you for having me.
I'm doing excellent. TBC is the largest capital region-based CPA firm on the ABR list, and they just celebrated their 50th anniversary. Welcome, Gretchen. Tell us a little bit about TBC and what makes your firm stand out.
So, Walter, TBC, as you said, just celebrated its 50th year. We started in 1971 with only 3 employees. We are now over 100 employees. And we work out of one location, which is wonderful because I can walk down the hall and talk to almost everybody. We service businesses and individuals all throughout the Northeast and throughout the country, from small businesses to very large businesses in many different industries. We focus on financial statements, tax compliance, pension compliance, client accounting services, just to name a few things. And it's really a full service accounting firm.
So tell us, what are some of the key items that people should keep in mind when filling out their personal returns this year?
So fortunately this year, as compared to the past 2 years, there isn't as many changes that we need to talk about, but there are a couple that I think people really need to know. That we received the 3rd stimulus payment in 2021. And if you were economically eligible, you received $1,400 for yourself, for your spouse, for any children. So we need to remember to put that information in with our tax information. If you didn't receive it, it's possible that you're still eligible for it in 2021. So we want to make sure that that's included. Additionally, the advanced child tax credit happened this year. That was also paid monthly. Half of it was paid monthly from July through December. You did not receive it, you might be eligible. If you did receive this one and you were not eligible, you do need to repay it back. And so that's information that really needs to be put together for your tax professional. New this year is a New York State real property tax credit. New York State has given you a credit this year somewhere minimum of $250, maximum of $350. And that's if you make under $250,000 and your real property taxes are greater than 6% of your income. So that's also something to think about that's new. If you're charitably inclined, you can take up to $300 per person as a charitable deduction this year, regardless of whether you itemize your deductions or you take a standard deduction. So those are just a couple of things that are changing. But like I said, mostly everything for this year is staying rather consistent.
That's good information to know. So when we transition to businesses, specifically businesses in New York State, are there new taxes or regulations they need to be aware of?
Yeah, so New York State instituted this past year a pass-through entity tax regime. And this really benefits small businesses. So you have to be a partnership or an S corporation. And it benefits the owners because the entity now pays the state tax. And by doing that, we end up getting a federal tax deduction, which we could not get before because on our itemized deductions, we're limited to $10,000. And if you own a home and you're paying New York State taxes, you're going to well exceed that $10,000. So this was a way for New York State to kind of help its taxpayers get a federal tax deduction. The regime itself is elective, so it is not automatic. You have to go into the New York State online tax website and elect in, and you have to elect in by March 15th of every year. So for 2022, you've got to make that election by March 15th. You also have to pay estimated taxes, but this does give you a significant benefit for business owners that we did not have before.
There have been some changes to the limitations on losses. Yes. Can you tell us a little bit about those?
Sure. In 2017, the TCJA limited the amount of losses that we could take for businesses and for individuals on their personal tax return. Then came the pandemic, and they put a moratorium on those rules for a year. So for 2020, we didn't have to deal with those rules, but now we're into 2021 and those rules are back. So there's 2 different types of losses. You can have a net operating loss. So maybe your business loses $10,000 last year. It carries over into 2021 And this year, let's say you made $10,000. You would think that those numbers would offset so that you could have no tax due. The new rules state that you can only offset 80% of your income. So in that example, you could offset $8,000 and the remaining $2,000 you're going to have to pay tax on, and the loss that you did not take can roll over into the future year. From an individual perspective, they're limiting your excess business losses. So if you are an individual and you have rental properties, you have a Schedule C, or you have pass-throughs, partnerships, S corporations, and you have business loss, you are limited to the amount you can offset your other income. You can offset business loss to business income, but then you can only offset, if you're married filing joint, $524,000 of other income, or if you're single, 262,000 of other income. The rest you don't get to offset, and you have to carry that forward as a net operating loss. So we're seeing some of that happening because we are still in a pandemic, and businesses may still have losses going through on their tax returns, and we need to be aware of these rules coming back into play.
You know, you've shared a lot of good information with us here today, and I'm sure we've just only scratched the surface.
Absolutely.
How can people connect with TBC to get personalized assistance?
The best way is to go to our website. Our address and phone numbers are right on our website, which is www.tbccpa.com.
Thank you for sharing your insights with us today, Gretchen. Congratulations on your 50th anniversary. And I know the information you share with us today is very valuable to our audience. Thank you very much for chatting with me this afternoon.
Thank you so much for having me. It was really fun.
Thank you.